As I said just then in the headline, Australia's official cash rate has dropped under 1% for the first time after the Reserve Bank made another cut today. The cash rate now is at a record low of 0.75%. Joining me now to discuss what all of this means for all of us and the economy is Adam Creighton, the Australian's economics editor. Adam, great to have you on the show. What did you make of this cut today, and what do you think it tells us generally about the economy?
Well, look, firstly, I think I'd say that I was actually surprised the RBA cut. Certainly the market pricing was for an 80% chance of a cut, but I thought when the house price news came out of a further 1.7% bounce in the two capital cities, I thought that that might actually convince the board to wait. There's always enormous value in waiting to see how things are going to turn out, but the RBA, of course, has pulled the trigger. And yes, we have 0.75% now, the lowest ever. We're going to be seeing mortgage rates less than 3%. Which is also the lowest ever in Australian history. I think it's a real risk of the RBA. They have moved contrary to the advice of many senior people, including former Treasurer Peter Costello, former RBA board members, senior professors, pretty much all of the economics profession. So they are going out on a limb here, and they do risk stoking another housing boom.
Okay, this is the third cut in 5 months. There's a lot of analysts out there today after this cut saying that there could well be one around the Melbourne Cup week when the RBA again meets. Whether or not that's likely, they're still saying, economists are still saying they predict that it will fall lower, if not by the end of the year, certainly not so far away. Where do you go once you get down to these sorts of figures, though? That's the difficulty for the RBA.
Yeah, certainly that's right. Look, the probability, I think, is about 70% of a further rate cut before the end of the year. And look, most economists think at that point the only option left for the RBA is what's called quantitative easing, or the artificial creation of new money to buy government bonds. Of course, that's what's happened in the US, in the UK and Europe now for many years, but it's certainly not been tried here. And I think the political consequences would be significant for the government, because I don't think people understand it. They don't trust what is in effect money printing. So I think it would bring a whole host of problems. And, you know, more to the fore, it's not really worked overseas. I mean, the relationship between these financial variables and inflation and the jobs growth is extremely weak. Now the RBA thinks that by cutting rates today, it can somehow get the unemployment rate down to 4.5% from the 5.3% where it currently is. And they also think that they can get the inflation rate back from about 1.6 to above 2%. But all the evidence says that their relationship is very weak. But the relationship that is very strong is between home lending and house prices and the cash rate. And certainly there will be big changes there. And as I said earlier, if those changes are in the direction of another housing boom or another credit bubble, there will be big concerns down the track about whether this was a wise decision or not.
Australians are indebted, basically, predominantly from their mortgages in a way that very few householders around the world are. It's record levels of indebtedness. That is a real concern. I know it was a concern in the times that I worked inside the government. Real concern that so much of our wealth, our national wealth, is basically caught up in mortgages. I'm concerned when you look at the data today that, yes, there will be maybe, well, let's hope, some movement on mortgages, but very often the banks do not pass on the benefit to consumers. But at the same time, those in the marketplace who rely on savings and the income or interest generated from their savings to get by are hardest hit when these sorts of cuts happen.
Yeah, well, certainly we've just heard, actually, I think about half an hour ago, that the Commonwealth Bank, the nation's biggest lender, has only passed on half of the latest cut, I think 13 basis points. So certainly that will be controversial. I'm not aware yet of what the other majors have decided, but normally they will follow the lead of whoever goes first. So I expect that they won't pass on the full cut. So that will frustrate the government. And just on your second point, you're quite right. This will affect the rates on term deposits of interest rate accounts all around the country, and that particularly affects older Australians. So there'll be controversy there too. The banks themselves don't particularly like this change because it tends to squeeze their margins. So they'll be upset too. So pretty much everyone is upset, I think, about this change.
All right. And do you think that the other banks will follow suit? Have we heard anything tonight?
Look, normally that's what happens, although I think ANZ has said that it's not going to make a decision today. Certainly some of the smaller lenders have already announced that they have cut their rates to 2.9%, 2.8%. So we truly do have extraordinarily cheap finance in Australia now. And actually, it's worth pointing out, I meant to say earlier before, but the size of the rate cut, the cumulative rate cuts now, the 3 rate cuts we've had since June, is more than double the impact of the government's tax cuts. So that is a sizable stimulus.
Okay, put your political hat on, Adam. Very quickly, both sides of the debate came out, the left and the right, arguing that it was, this is Labor's argument, it was a fault of the government on fiscal policy not doing enough. And the government was saying, well, no, I think all of our settings are right. Where's the truth lie?
Well, look, I think the government probably could bring forward some of its tax cut plan. I think waiting 5 years, as I've said many times, is pretty ridiculous. But that said, I don't think the government should suddenly ditch its surplus plans. I mean, the reality is, the economy is being affected by global forces. The low inflation and kind of weak wage growth is a problem in all countries. So it's certainly not the federal government's fault.
All right, we'll look forward to your analysis tomorrow. Adam Creighton, thanks very much for your time tonight.
Thanks, Peter.